Well, good afternoon, everybody. My name is Eric Levinson with Vena Capital, and welcome to our Q1 review and Q2 outlook. We're on the heels of what has actually been a very good first quarter for both the economy and certainly the stock market. So this afternoon, we will review what's going on in both the economy and the market. My colleagues Macroeconomic, our chief economist, and Lin Vu, our head of research, will cover the macro and then the micro. And while we'll talk a bit about what happened in the first quarter, certainly we'll spend more time on a Q2 outlook and the remainder of the year. And then after our prepared comments, we will move to Q&A. So if you do have questions, please type them into the chat function. I'll have my iPad here once we get ready. And so if you do have questions, we'd love to answer them. So first things that we always do is we want to say, well, how have we done? Because at the end of the day, we can talk about the economy, we can talk about the market. What people really want to understand is how we delivered for our clients. We're looking here first at our two offshore funds. VVF, which is our Luxembourg-listed UCITS portfolio, Article 8 SFDR. And again, performance has been excellent. So first quarter, the index in US dollar terms up 11.3%. Year to date through March, the fund up 15.5%. I will point more importantly to the three-year number. And I think this is a really important thing to understand. I'll use the UCITS fund as a proxy, but it's true for all of our funds. You look at the market through March, the market's up 0.1. 10 basis points. At the same time, the fund is up 11.7% in dollar terms. And the reason I mention that is oftentimes we talk about why Vietnam and we talk about the beta, we talk about the tailwinds, but at the end of the day, it's really about the alpha opportunity. It's about Vena Capital, the research, the portfolio managers, identifying the right companies to generate performance. So as much as we talk about Vietnam being a great opportunity, which it is, it still comes down to active management. It still comes down to manager selection. And so the market's basically flat for 3 years. We've delivered nearly 12%. We look at VAF, which is our Cayman feeder, buys into a local fund. Year to date, 10.9, 3-year return at 12.1%. Again, that's US dollar terms. So again, what we talk about is our performance has been excellent, and it's not just one portfolio. We then look at our local fund. So this is in VND terms. VEOF, which is primarily large and mid-cap companies. Year to date, 16.3 versus 13.6 through the end of March. 3-year number, 15.2 versus 2.5. Again, VND terms. VSAF, which is the number one fund over the last 3 years. 3-year return of 17.7% versus 2.5. And again, I think it shows across the platform, organizationally, the PMs have done an excellent job. We launched a new fund last year in May called VMEF, which is the Modern Economy Equity Fund, more of a thematic portfolio focusing on the beneficiaries of the developing middle class. Year to date through March, up 17.4 versus the benchmark, and since inception, 37 versus 24. So really launched with a traumatic performance. And then finally, VIBF, our balanced fund, 50-50 split between equities and fixed income, up 10.5 versus 7.4, and again 10.7 versus 4%. So again, don't want to really focus too much on it, but I think a lot of credit goes to the PMs, because as much as we talk about Vietnam, I think it's important to separate the beta story, which Michael and Lynn will talk about, and then the alpha, which is really at the end of the day, the PMs have done a wonderful job. So with that, let me introduce our chief economist, a familiar face to everybody, Michael Kokolari, who will walk you through the macro. Thank you, Michael.
Thank you. Right. So we're going to talk about 3 topics today. First, we're going to have a quick review on what's going on with the economy. The summary of that topic, I'll just tell you up front, is that we still expect 6.5% GDP growth this year. No change to our forecast. Second topic about what's going on with the Vietnam Dong. The summary of this topic is that I expect interest rates in Vietnam will be a little bit higher by the end of the year. Not high enough that it will harm the stock market or move the needle for the economy, but interest rates will be a little bit higher, mainly because of the dong. Also, inflation's picking up a bit as well. And then the third topic I'm going to hit on is about FDI in Vietnam. So Tim Cook was here yesterday. We have some pretty good figures for FDI in Q1. So the FDI story in Vietnam continues to be strong. You know, this is a topic that I hit on in a lot of these webinars, but there's a couple things to keep in mind. First of all, foreign investment is the most important growth driver for Vietnam. Let me repeat that. Foreign investment is the number one most important growth driver for Vietnam. So the picture for foreign investment is still very good. Recently we've had some headlines about some political developments and some court case trial, blah, blah, blah. This is all noise. You should ignore that as far as FDI is concerned. The FDI in Vietnam, the picture is still very strong. By the way, something interesting I say to some people sometimes, if you want to think through the appeal of FDI in Vietnam, do one of these, pretend you're doing one of these like a Harvard Business School case study, HBS case study, where they put you in the protagonist. So you're the protagonist, you're the decision maker, and think it through. If you were going to set up a factory now in the world, where would you set it up? You'll come very quickly to the conclusion Vietnam is like the best or one of the best places. Maybe in India, if you want to sell to Indians, that's a different story. But FDI story is still very strong. Okay, so let's get into it. In Q1, Vietnam's GDP grew by 5.7%. So I still expect 6.5% growth for the full year. By the way, this table, the right part of the table here, I haven't changed my forecast. These are all the same forecasts that I had at the end of the year. And so in light of the Q1 data, I haven't changed anything. I'm still okay with all these forecasts. Now, you might, when you see these numbers, you might right away think, okay, well, how are you going to get from 5.7, a seemingly so slow start in the beginning of the year, how are you going to get from there up to 6.5 for the full year? I mean, one thing I'll mention right off the bat is, don't forget, in Vietnam, we do have a kind of a seasonal tendency for the growth to accelerate as the year progresses. The US is our biggest export market, Christmas at the end of the year, et cetera, et cetera. So that is kind of a structural phenomenon that plays out every year. That's not the only story. I also expect a pretty big pickup in consumption. Real retail sales is the proxy there, and a continued improvement in manufacturing. So what I'm going to do right now is kind of go through why these two I expect to improve as the year progresses. The recovery in Vietnam's manufacturing and exports is the single most important thing that's happening in the economy this year, because last year this was the biggest factor that was weighing on growth both in Vietnam and across Asia. So remember, in short, the story is that the US firms had too much inventories, so they cut their orders to not just Vietnam, but the factories across Asia. Vietnam's exports actually declined last year, which is the first time since the great financial crisis. This US inventory story is over. I'll show you some pictures on that. And then the other thing is that you can see we're off to quite a strong start with the export growth. Okay, it's only one quarter, but still, you see there's a big mismatch between how much stuff we sold, export means sell, how much stuff we sold, and how much stuff, how quickly we produce stuff in the beginning of the year. Now, like, you don't need to be, PhD economist to realize if the rate that you're selling stuff is a lot faster than you're making stuff, then that's a really good leading indicator that as the year progresses, we're going to have to start making stuff at a faster pace. Okay, so I still expect 8% growth in manufacturing this year. Manufacturing, remember, is just over a quarter of the economy. That having been said, I do see some upside possibility for that based on what we've seen so far this year. So I wouldn't be surprised if this number comes in 9, maybe even over 9. To put that in context, pre-COVID, this used to grow double digits every year. So this is still kind of relatively conservative assumption. The main driver, as I just gave in my introduction to this topic, is what's going on with US inventories. This line is the US, the PMI index, it's the inventory subindex. So you see the line in the middle here. When you're above this line, it means that firms in the US, their inventories are going up, okay? And when you're below this line, the inventories are shrinking. Let's just have a quick review. Remember what happened those last couple of years. During the COVID time, especially late in the COVID time, 2021, 2022, remember what was happening at that time is we had these supply chain disruptions. And so the firms in the US, like Walmart, Target, Nike, these kind of consumer-facing firms, they were having problems getting the products that they ordered from, especially from Asia, getting them actually to come to the US. And so what those firms were doing at that time is they were hitting the order button like over and over, like order, 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 order. Maybe they were thinking like if they keep hitting the button, it's going to make it come faster somehow. So this reminds me of myself when I'm in the elevator. You know, you hit the close button, close, 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 close. It doesn't make anything go faster, but be that as may, that's probably what was kind of happening at that time. And so you had an enormous swelling of inventories of consumer-facing firms, particularly by the end of 2022. This is when their inventories were going up. And so last year, 2023, what the firms did is they slashed the inventories, which basically means that they kind of more or less stopped ordering products made in Vietnam, made in Asia in general. And you can see that towards the end of last year, firms in the US were depleting their inventory at the quickest pace in almost a decade. But what you can also see is that's clearly over, okay? So this chart is kind of neat because you see this kind of pattern in economics over and over. It's like a sine wave. Things go up, things go down, things go up, right? So this is how things are playing out. Now, we're still below the line in the middle. It means that the inventories are still shrinking a little bit, but it's very clear we're about to head to the point where firms are accumulating inventories. You know that this week we had very stronger than expected retail sales figures out of the U.S. The economy in the U.S. has been, it's been resilient. So we're clearly headed to a situation in which firms start rebuilding their inventories. And one way you can see that, this is the picture in the US. The inventory data in the US is very good. The next slide, this is what's happening global. Because the phenomenon I just showed you on the last slide, this is both in the US and the EU and the developed world, but the data is better on the last slide. But this slide, you can see, this is the export orders, and this is for global, okay? So again, firms were cutting their exports orders for new products, particularly in Asia, including Vietnam. That phenomenon is coming to an end. You can see it's about to flip to positive, where firms export orders are increasing. And for manufacturing, it already has flipped to positive. So factories around the world are now growing. So we've had about a year and a bit of a kind of global manufacturing recession, and that's over. And that, this is one of the reasons why Vietnam's economy is coming back. Export and economy is coming back this year. Here you can see, so this is COVID time. Exports soaring, this is last year, and now we're back to growing our exports. In Vietnam's case, remember that about a third of our exports are high-tech products, and what's doing particularly strong right now is laptop computers, especially, and also some consumer electronics. With the laptop computer, people are starting to buy more powerful computers. They want to get ready for AI, and also there's just, last year, in the beginning of last year, global PC sales were down about 30%. 3-0 year on year. We didn't, this is Vietnam, we didn't get hit quite as hard, but now Vietnam's laptop computers, exports, electronics are up more than 30% year on year. So this is kind of the summary of the recovery in Vietnam's export sector. And then, as I mentioned before, exports a lot stronger than the actual amount of stuff we're producing. And so again, like, you don't need to be a rocket scientist to figure out if you're selling more stuff than you're making, your inventories are going down. This is Vietnam's PMI, the inventory sub-index of the PMI. So our inventories are going down, factories are hiring workers. So this is the story, this is kind of the most important driver of Vietnam's economic recovery this year. So that's about manufacturing. Now, that having been said, we also expect a modest pickup in consumption. So real retail sales is the proxy there, okay? Why do I expect that? Well, last year, there were two factors that were really weighing on consumption. The first is that there were a lot of layoffs in FDI factories. Well, that's over. I just showed that on the last slide. So hiring is now, wages are going up again around 7-8%, which is kind of typical in Vietnam. And the other factor last year that was weighing on people's consumption was that there was a real big slowdown in the real estate market. Activity, transactions had really ground to a halt. Now this year, we do see that that's over. We're starting to see real estate market activity bubble up again. And that, of course, that will be good for like property developers, banks, lending to that kind of stuff. That's more Lynn's area, so I'll let her to cover that. But what I want to talk about is that the recovery in sentiment in the real estate market, that has what economists call a wealth effect. So main asset tends to be a house. That's everywhere in the world, certainly in Asia. And so when your house price is stable or even going up a bit, then you feel more confident to spend. And so that's one of the things we see coming in this year. The other, so those are the two main factors, the employment and the real estate market. The other things is that we will have a bump in public sector wages in the middle of the year. It's pretty big. It's about 1% of GDP. That's enough to move the needle. And there's also something which is a bit geeky that's called base effects. And I won't spend too much time on that because I know Eric will be unhappy if I go too much down a geeky rabbit hole. But this is an important part of what the story is. So I'll just touch on that briefly in a second here. Here's the real estate market. This article is just a few days ago, by the way. So things are really starting to bubble up there. And I think, again, Lynn's going to get more into that topic. On this base effects topic, this is what happened last year. This is 2023. And remember that, like what we do in economics, usually most of what we do is we're looking at like what's happening this year compared to what was happening last year. So it's growth this year versus last year. At the beginning of last year, we had very, very strong growth in real retail sales because we were still benefiting from the post-COVID type stuff. Tourists started coming back, et cetera, et cetera. So I showed you a second ago, we're 5% for Q1 this year. But one of the reasons why this number is low, 5.1, is because we're comparing to last year, which was very high. So we set kind of a high base last year. So the improvement that I expect as the year progresses, about half of that improvement is just an arithmetic phenomenon that we're off this base effects. Okay, so that's one of the reasons why Q1 looked kind of weak. Okay, so that's a summary about where we are with the economy and where we are with the GDP growth. The other thing that's going on is we're having a modest depreciation in the value of the dong, around 3 to 4%. It's bouncing around a little bit day by day, but around that sort of level. There are two things that are weighing on the value of the dong, that are depressing the dong. One is that Vietnamese are very enthusiastic buyers of gold. And it ends up that when they're very enthusiastic about gold, that has a depressing effect on the dong. I'll talk about that in a second. The other is that the dollar is just on a rip because of the delayed rate hike expectations. By the way, the dollar being up is kind of a mixed blessing for us. Part of the reason the dollar is up is because the U.S. economy is strong. It's our biggest export market, so that's kind of, goes in both directions. Now, against those two factors that are weighing on the value of the dong, at a very strong trade surplus. Last year it was 6% of GDP. We're starting off with 8% of GDP. Remember, any number over 3 to 4% is big. So 8% is huge. Good results on FDI inflows. The net result is you have some things weighing, some things supporting. I expect that we will see that by the end of the year, interest rates, particularly the deposit rates that banks pay, will probably be about 0.5% higher, maybe even a bit higher. Primarily because of this, because of the dong. Inflation will probably pick up a little bit with the oil prices, et cetera, by the end of the year as well. But the main thing is because of the dong. So this is the story with the Vietnam dong. Now, about gold. The story about gold in Vietnam is kind of a complicated one. We actually had some news on this topic recently where they're going to increase the gold imports to Vietnam. But let me just give a very, very summary, and then if anyone wants to get into this topic more in the Q&A, we can. The way to think about it is that if a Vietnamese saver has a big pile of Vietnam dong here, and what they want to have is a pile of gold instead of a pile of Vietnamese dong, somewhere in the middle, this is getting into geeky details. The details are not important, trust me on that. But somewhere in the middle, the money has to become US dollars at some point. So you have to go from dong to dollars to gold. At some point, that transaction has to happen. So when Vietnamese are very enthusiastic buyers of gold, because we're in a gold bull market, somewhere in the middle, there's a trade where dong gets sold and dollars get bought. The important thing right now, so I've been here for 15 years, and in previous episodes, a long time ago, when there was a big interest in gold around 2011, 2012, for example, what was happening at that time was people were afraid to hold dong, so they were kind of fleeing the dong because they wanted to hold gold as they felt it was more safe. That's not what's happening here. So what's happening here is just there's an enthusiasm for gold and other kind of alternative assets, and that entails, at somewhere along the line, money being sold, dong being sold to buy dollars. So this is really what the main story about this, the gold topic. And then the other reason why the dong is under a bit of pressure is because right now, the interest rates in the US dollars, because they hike the rates so quickly, the interest rates in dollars are actually higher than the interest rates in the Vietnam Dong, especially in the interbank market when banks kind of trade amongst each other. So banks have an incentive to either like take their dong that they're earning kind of low interest rate on, 2%, 3%, something like that, put it into dollars where they can get sort of 5-ish type percent interest rate. Or actually what's really happening is that if you have dollars, you're thinking, well, let me hold on and keep it as dollars for longer because I'm earning a higher interest rate on that. Now, what the State Bank of Vietnam, they understand this story very well. And the chart that I have on the screen here, you see the dashed line. When you're above the dashed line, this is just US dollar interest rates, or Vietnam Dong interest rates minus US dollar interest rates. So when you're above, it means Dong interest rates are higher. And then when you're below the dashed line, it means that the Vietnam Dong interest rates are below the US dollar interest rates. So whenever we see that the Dong depreciates by around 3 or 4% year to date, that's typically when the government comes in and they tighten monetary policy. That could mean they drain money out of the money market. By the way, when you drain money out of the money market, it means that there's less money available to be in the stock market, for example. They could hike policy rates. We don't think they're actually going to do that this year. But that's the type of things they do to try to close this gap to get the Dong interest rates back up and in line with the dollar interest rates. We mentioned this at the end of last year. Usually they intervene or they take steps when the depreciation is around 3%. And that's what they've done again at the end of last year and also again this year. Okay, final topic is about the FDI. Reminder that we are a big beneficiary of the way that geopolitics is shaping up in the world. We're making more and more complicated stuff. In Q1, the amount of brand new FDI projects, new factories, it's mainly new factories, not all factories, but it's mainly new factories. So the number of the amount of money poured into new projects, brand new. So not, you could have an existing project that you add more money to. This is even more important leading indicator because it's like a brand new factory where you're setting it up for the first time. That number's off the charts. These are stellar numbers. Here's a chart that I've showed in the past, but it's a very important chart. The red line is FDI flows in between countries that have good political relations. So for example, in Vietnam's case, we just signed this comprehensive strategic partnership with the US. So we're under the friendshoring umbrella. And now we have additional comprehensive partnership with Australia, Japan, kind of adding all the friendshoring companies one by one. And at the same time, we have very good relations with China. So we have bamboo diplomacy, friendly with both orbits, the China orbit, the BRICS orbit, the US orbit. And what this chart shows is that there's more flows of investment between countries that have a good political relations. That's a more important factor than being geographically close to each other, okay? So we're still benefiting from that. There has been, one of the reasons I wanted to hit on this topic again is what I'd mentioned at the opening about those recent headlines that should be ignored. Another thing that is not important, that I do still see people are concerned about that, Vietnam implemented the global minimum tax at the beginning of this year. So it used to be we could offer tax incentives to factories to come here. Now the minimum tax is 15%. Countries around the world are implementing this system. And actually, I'm kind of surprised people are still talking about this because it's like, to me, it's very obvious. It's not important for FDI inflows. You see here, this is a survey that Eurocham did last year. They asked, and there's lots of surveys. This same kind of survey is done over and over by the World Bank, by Brookings, et cetera, et cetera. This is a survey of foreign investors. Foreign investors will consistently tell you, what Vietnam should do to improve its appeal as an FDI location is around ease of doing business, around infrastructure. Of course, labor is very important. Yeah, if you're going to give people tax breaks, of course they're happy. That's good for them. But to say, like, if you take away those tax breaks, it's going to stop people to invest in there, this doesn't make any sense. So I'm surprised how many people really should know better are still kind of fixated on this issue, although I think people are coming around to it. So GMT is not a threat to FDI. India is not a threat. We've talked about that many times in the past. Here's a new one. this whole phenomenon of the reshoring in the US. So we're going to make factories in Arizona, and we're going to make stuff there. And well, you know what, and you see it on these headlines, what firms are finding out is that when you want to build a factory in the US, I mean, the cost is like 4 or 5 times what it cost in the US, here in Vietnam or in the region. So this is kind of off to a not much of a good start. Okay, if you're going to make like super high-end stuff, that's different. But there really is no threat of things that we make here in Vietnam right now, of any of that being shipped back to the US. It's just not going to happen. Okay, so those are the topics that I wanted to cover today. And now I'm going to hand over to my coworker, Lynn, who's going to talk about the implications of all this for the stock market. All right.
Thank you. Thank you, Mike. Hello. Now let's take a look at Vietnam equity markets in the first quarter. This chart is to show the performance of the VN index in the first quarter. As you can see, the VN index has gained 11.3% in US dollar terms in Q1 this year, and being the the third best performing index in Asia after Japan and Sri Lanka. Sri Lanka is actually a very small stock market with only 15 billion in market cap. So we are doing pretty well. And Vietnam, most of the rallies has been driven by domestic investors, while the foreign investors further trimmed down position recently. This slide showing the performance of the VN index. What factor contributed to the strong performance? It has been the recovery of macro backdrop together with the strong recovery in the earnings in the last quarter of last year amid a record low interest rate environment. You can see that the recent two wave for the stock markets, this wave lasts for about 6 months, and the most recent wave started from October last year. The stock market has gained 25% since then. What sector rode the market growth from the trough in October last year? As you can see, brokers, materials, information technology, consumer discretionary, and industrials have outperformed the VN index, the level of 25.5%. What have driven the performance of the brokers? Higher trading volume. The daily trading volume of the Vietnam, the VN index has reached $1 billion US dollar, significantly increased from 700 million on average of last year. Higher number of new account opening, the further progress on KRX testings, and the expectation for Vietnam to move to emerging markets next year have been the key catalyst for the brokerage sectors to move up. For the material, GVR, the rubber group has been the key driver because the rubber price increased significant. For information technology, it's FPT. FPT has increased 40% since October last year, and FPT is also one of our key holdings, and will continue to benefit from the global transformations technology wave. Because we are looking at Q1 performance, so this chart is just showing from Q1, and similar to the previous one we have mentioned earlier, material, brokers, technologies has been the key market leaders. Banks has started to outperform since Q1. It has been lag in Q4 last year, but right now it has increased about 20%, and the banks account for about 40% of the VN index. So it has been the key return contributor for the index for the quarter. And it's not surprisingly to see most of the names here are the defensive, because the market is expected to enter a recovery phase with higher growth. So the defensive tend to underperforming the market. Real estate, Q1 usually not a good quarter. The new launches usually happened in Q3, Q4, and it's not a surprise to see real estate has not doing very well in the first quarter of the year. Quickly look at the new trading accounts. As you can see, it has been improving. The two negative numbers is in October and November last year was because the government has been cleaning up some of the inactive accounts. But since then, we see an uptrend. Is the continued foreign net sellings showing a concern? We have some numbers over here. If you look at Vietnam and ASEAN, we keep having a negative net foreign outflows since 2020, with the exception of 2022. The good news is that the fund outflows as compared to the market cap is quite small, not very significant in our view. So within ASEAN, where the money coming to, if they're coming out of ASEAN, where it is coming into, as you can see, India and Japan are the two markets that attract huge amount of foreign net inflows, 21 billion in India and 29 billion in Japan last year. Then now, what will drive the markets from here? So let's take a look at the earnings growth. As you can see, there is a recovering trend quarterly in earnings growth of the market. This is our coverage, which account for 90% of the wholesale market cap. And we, based on our forecast, we think the market could grow from 10 to 15% in Q1. Exclude Vingroup family. Vingroup, the market in Q1 could technically be dragged a little bit by Vingroup because Vingroup as a real estate company, most of the bulk sales will not come in Q1, and the recognitions of the sales of Vincom retail will not be booked in Q1 this year, but it will be booked in Q2. So we expect from Q2, the profits from this group could improve significantly. As a long-term investors, we usually look at 2-3 years ahead. And from our view, the market has rebounded from the trough in 2023. And the growth of the next 2 years is pretty strong. We expect the market to grow 15 to 20% this year and another 18 to 20% net earning growth next year. This is to show breakdown, the sector breakdowns of where the earning growth are coming from. For this one, port and logistics, it looks quite scary from 25% decline, but actually if we take off the effect of one-off events when Geopolitics sell some of take profit from the sale of the ports, the net earnings for ports and logistics actually growing 10% year on year. And on the other side, as you can see, real estate will see the biggest rebound this year from the soft base last year. And we think this could happen throughout the second half of the year for the real estate sector when the pre-sales will be, when the new launches will happen and pre-sales number will come in, reflecting in the earnings growth. This slide is to show Vietnam earnings growth, EPS growth in relation to other countries. And in the next 2 years, our earning growth is really strong compared to peers. What can drive the market? Again, from the valuation perspective. As you can see, this chart is showing the PE forward 12 months for the VN index. The market has gone, the valuation has gone up from 10 times PE crisis level to 12 times. But we think given the growth we mentioned earlier, and the market level right now is still below the long-term average, 10 years average. We think that the market is still remain relatively attractive. This slide is just to show a high-level view on sector valuation compared to the 10 years PE historical average. The red dots is actually showing the PE forward in 2024, and the black line is the 10 years PE means. So the low the dots compared to the black lines is the cheaper the sector is. The conclusions are half of the markets remain cheap and banks remain cheap. But even with the sectors that looks like it's more expensive, like IT and port logistics, their growth potential can be well justified for the valuation. Like we still like FPT, for example, because if you look at forward PE in 2025, it is trading at 16, 17 times PE compared to tech stocks. This is still reasonable level, and the earnings growth of the companies is stable at 20-25% with a return on equity of about 30%. Our portfolios is usually constructed with 20-25 stocks, and we aim to construct a portfolio with higher growth than the market average, but the valuation, the PE, is lower. So the beta for the market is good, the outlook is good, but what value we can add is actually the stock selections, and essentially in the past 2 years, as Eric mentioned earlier, as the market is technically flat, but our portfolios has been performing really well compared to the average of the market. Let's take a look at what could drive the market up from fund flows perspective. We have shown these charts before. It illustrates the gap between the deposit rates and the gains in the stock markets. As you can see, the gap between the two lines is expanding, showing that investing in the stock markets is still considered as an attractive channel compared to keeping the deposit rates. To conclude my presentation, we would like to go back to our investment themes for 2024. There are the themes that we think has performed well. That is banking, brokerage, industrial, port logistics, and IT technology, with the reasons mentioned earlier. And there are themes that we think will perform better in the second half of this year, such as the retailers, to benefit from the improved consumer confidence driving from the bounce of export and higher employment rates, or the real estate to benefit from mortgage rates continued to be adjusted down, and the construction material to benefit from higher public spending by the government to support the GDP. This is the end of my presentation, and now we will open for Q&A.
All right, well, we are back, and Lynn and Michael, thank you so much. So as I mentioned earlier in my comments, I have an iPad here with questions that have come in from the group, but I will tell you, if you have additional questions, please type them in. Michael, we'll go to you, although Lynn, you may want to go to you on this one as well. And this is a common one, but I think it's important that we ask it given what's going on today. So it says Vietnam's often likened to China 15, 20 years ago, in fact, sometimes by us. With what happened in China recently, government intervention, education, tech sectors, is this something that Vietnam investors should be mindful of?
Okay, good point. So Vietnam and China are both doing the East Asian development model. So we focus on manufacturing exports and stuff. So there are some similarities between the two of them. There's also a couple big differences. One difference is that the demographics of China kind of peaked and started rolling over a few years ago. Also, China really achieved a lot of economic growth with an enormous amount of investment. They built all kinds of empty apartment buildings and infrastructure, this kind of stuff. We didn't really do that in Vietnam. So long story short, China is really experiencing a period right now of transition, I believe, in which they're switching from an economic model based on real estate development, based on infrastructure development, back to more manufacturing. And in that interim period, I think it's not surprising that you've seen the government kind of get very interventionalist in the economy. People blame it on the personality of Xi Jinping. I mean, we're not geopolitical experts, but I think what's happening there right now would have been happening irrespective of who's in charge. And long story short, all those issues I just mentioned in China, we don't have any of them. So Vietnam has got a good 10 years to run before we run into any of those kind of problems.
Even that, you know, you look at education, which is a huge focus. We're investors in education at Vina Capital, but if you think of Vietnam, want to drive more investment in education, want to drive more investment in technology. So to me, it's not about 10 or 15 years out. It's actually about policy.
Well, and also I think what was happening in China was there was a kind of an arms race going on with the education, that the parents were just spending enormous amounts of money to pump their kids up, and so, but we don't have any of that kind of stuff here.
All right. So 3 questions just came in about almost the same topic, but related, because we didn't really touch on it. So we knew we would touch on it in the Q&A, and that is politics. And so a couple of the questions just came in, which is, well, one is specifically, are we concerned about changes in the Politburo, and how do we expect the power transition to the new leader? The next election is in 2026, and so I think it's probably a little bit maybe too soon to talk about the transition of power, but obviously with the president resigning just a few weeks ago, certainly people are already looking to that. So maybe, Lynn, a comment about kind of how we think about the most recent resignation and kind of outlook for politics.
We look at the previous, there are 2 previous resignations of the prime ministers, and the overall impact on the stock markets that we can see is that there are some volatility during near the event. But if you look at like 2 weeks, a month before and after the event, the markets somehow did not react that severely with the change in position, personnel in the government. And in our view, personnel change of the government do not change the policy direction of Vietnam. So it could cause some of the volatilities in the short run, but in the long run, it will not alter the growth story of Vietnam.
Yeah,
I think just to add to that, I mean, Lynn is focused, of course, on the stock market, and I'm looking at sort of foreign investment, like I referred to in my presentation, the economy. And the key is that whoever's in charge, they're pro-foreign investment, and they want to attract money into the country, and that's always stable. And I think that's part of the reason why the stock market didn't really respond so much when we had these changes in positions, leadership positions.
And the question came on, and it's a little bit related. So there are 2 questions. One was, why did the index fall so sharply on Monday? And I don't know what the market closed at today, but the question was, I guess it closed down today as well. So Lynn, we'll go to you for this.
We somehow anticipate certain corrections for the market during this period. So our portfolios, most of the PM has certain risk management and have prepared for it. The market has been rallying for 25% since October last year, as we mentioned earlier during our presentation. And we think even in a bull market, it inevitably involves like corrections. Small correction is considered as healthy, and it will open opportunity for the PM to rebalance. Right now, we take it as an opportunity to buy the certain stocks that we cannot buy previous. For example, certain stocks that are too illiquid, we cannot buy before. The stocks that got run out of foreign ownership limit. So we can take this opportunity to rebalance our portfolio, and we don't think as long as the longer uptrend of the market persists, we think it's just an opportunity for the to balance the portfolio. Is not a big concern.
So Lynn, I agree with everything you said, and talking to the PMs and just coming out of the Investment Advisory Committee meeting earlier today, agree. So the PMs did a great job. But I'm going to ask you again, because you didn't actually answer the question, which is why did the actual market go down on Monday, and why did it go down today? So knowing that the market was up, I think 1.7%, big rally on Friday, knowing it was up 11, 12%, it's natural. But was there a specific catalyst? Was it what's going on in the Middle East? Was it gold? Was it the dollar? was it a combination of
today-
everything?
It's a combination
Today
of
it was kind
three
of about
things.
the dong and the dollar, I think. That was more today. And
Okay.
then yesterday, you can cover that.
It's a combination of everything. I would say there are conflicts in Middle East, and also about the gold auction, and some rumors on a little bit of the market, situation. But overall, we think when the market has a certain turning point, things will come in. Bad news seem to come together, and it's not really a bad news if we analyze it in how it's impact on the fundamental of the stock market. So the short answer is a combination of everything.
Appreciate that. And just as a follow-up, I'll answer this one myself, which means there's no black swan event from your point of view. That is correct. We do not believe this is or will be a black swan event, although I guess by definition we wouldn't see a black swan event. Okay, here's a question from Ad. Vietnam should be investing in infrastructure. It was said that this did happen in Hanoi, but not in Saigon. I'm not sure that's correct, but we'll get there. Is the government being prudent, thoughtful? Are the anti-corruption discussions making it harder? Are decision makings, are things taking longer because of the anti-corruption drive, and is that impacting the pace of infrastructure spending?
Yeah, I mean, the honest answer to that is yes. It is, there is a bit of paralysis of decision making happening.
Has it sped up?
I think, okay, last year we had a big speed up,
Yeah.
okay, and then this year, if you really look at the geeky details inside the government's own budgets, they're kind of forecasting a similar level of spending as last year. But last year was up like almost around 40%. So we had a big jump last year. This year will stay elevated. And I think the way I think about those kind of things is that right now, and we've published a lot of reports on this in the past, infrastructure is not a bottleneck to foreign investment coming. It's like would be nice to get going more quickly, but it's not a constraining factor yet. I think if it became a constraining factor, you would see everything speed up dramatically.
And just to go back to Ad's question, because I don't necessarily think it's true. I'd love your perspective. Obviously, the government's based in Hanoi. I don't necessarily, when I go there, see somehow more or better infrastructure in Hanoi than Ho Chi Minh City.
Hanoi is better. Definitely.
Yeah, that is.
So that's maybe not a Vietnam thing. That's maybe everywhere in the world.
In around area, Bắc Ninh, all of the Samsung.
Haiphong.
And I mean, to be fair to them, that's all the high-tech investment, or I shouldn't say all, but a lot of the high-tech stuff is going up there because that's where you're closer to the electronics supply chains of China and stuff like that. So it's kind of rational.
So maybe it's not necessarily politically driven. It's more about FDI and the existing.
Yeah, probably that could be a way
export
to
driven.
look at
Okay,
it. Yeah.
so more to follow on that. Okay, a couple of other questions. All righty here. Actually, this is a great one because it's in the press. I think we've talked about it a bit, but because it's in the foreign press more now, I want to ask about it. And it's the question about SCB. So I guess the question is, are we concerned about solvency of SCB? Will it impact the other banks? And SCB, that is Saigon Commercial Bank. That is the bank that's owned by Madame Lan. Obviously, her trial just concluded. And so while kind of in Vietnam, I don't want to call it old news, but certainly it's getting a lot of press outside of Vietnam because she was sentenced to death, which is not very common for what is essentially a large, massive scale financial crime.
Right.
So are we concerned about SCB and impact of the banking system?
So first of all, the government already pumped in an enormous amount of liquidity to this bank, when everything was
October
happening.
22.
Yeah, way back when. So there is some additional follow-up lending that's been going on, but it's nothing like that's going to move the needle in terms of, any sort of...
I think there was another Bloomberg article about it this week, and so I think it kind of became
come up interest.
back in the press, but within Vietnam. Len, do you have a comment as well?
Yeah, I think right now the next action of the government should be is that they have valued the assets under Miss Land. Right now the valuations, according to the valuation team, is about 30 billion US dollar. So it's according to the press, the loans providing to SCB is about 24 billion US dollars, right? It could well be able to cover that amount that the government has support in terms of liquidity for SCB. So those will help if they can sell some of the good assets. Generally, assets of Miss Land is in good location and with high value.
Yeah, and it's, again, it was a bank that was kind of the combination of three not so great banks already. And so this wasn't exactly a stellar high performer. It was always kind of a, out there type of bank that was not listed as well. All right, a couple questions came in. One is, and they're related, so I'll ask them both. Mike, these kind of go more towards you. One of them is, what happens, the U.S. economy has continued to strengthen. What happens to the dong if the U.S. Fed doesn't lower rates? And then kind of related, do you think the State Bank of Vietnam will raise interest rates to control the exchange rate? And answer them separately, but they're a little bit related. So
right, that's a great question. Obviously people are pushing back, especially after this week we had the strong retail sales figures in the U.S. So people are pushing back. I think now it's penciled in at September, could be even end of the year. That certainly puts upward pressure on the value of the U.S. dollar. That would certainly put continued downward pressure on the dong. That having been said, we are now have depreciated around 4%, 4 and a bit percent on the dong. So I think what
is that the maximum threshold, you think?
This is usually when they step in and get really aggressive. Yeah. So I'm not clear if we would have an actual policy rate hike. Policy rates are 4% right now, but I certainly think we'll see deposit rates get higher. So if the scenario, so we're already, sorry, I'm making the story too long. If we're already expecting that by the end of the year, deposit rates in Vietnam will be half or percentage point higher, if things turn out the way that you're mentioning, that would happen sooner and probably more. That would be the short answer.
And the other thing is important to think about, which is term deposit rates. If we talk about interest rates in Vietnam, we're really talking about bank term deposit rates. Yeah. And they went from a peak of 9 or 10%, where now functionally they're at about 4.5%.
Right.
Oh, yeah.
And so they're basically at kind of COVID crisis lows. The other thing the State Bank of Vietnam has already done open market interventions where they've done things what they can to kind of manage the volatility without actually having the banks increase rates. So there could be other levers that the SBV employs.
And the other thing, and I'm sure the policymakers are cognizant of this, is my whole presentation was really focused on this idea that Vietnam's benefiting from the revival of exports and manufacturing in the world. Actually, whatever they do with interest rates here is not really going to be affected by that. So that gives them some more leeway to bump it up to support the dong.
Right. So
in terms of interest rates, I can add a little bit here. The interest rate that has been picked up and what people usually refer to is the new interest rates of the deposits. But because we look at the banks, the bank balance sheets, it's overall including the new deposits, the new loans and the existing loans, existing deposits, because there will take time, still remains take time for the existing loan to adjust it down in terms of the deposits and lending rates. So the overall, the average deposit and interest rate in our model will continue to adjust it down at least for another quarter before it can reflect the new uptrend of the interest rate if there is any action from.
You mean as existing deposits mature, they roll over?
Yes.
So funding costs continue to decelerate, which is good for earnings of banks.
For another
basically.
quarter at least.
Yeah.
all right, another question came in from Ad. Thanks, and this was, for those of you that do follow Vietnam, and you probably do if you're watching the call, Tim Cook, the CEO of Apple, was in Hanoi this week, met with the Prime Minister, met with some influencers, had apparently some egg coffee, which was a big deal. And it says, what do we think of the announcement from Apple, the one where they talk about investing more in the supply chain? What do you think the impact of that is, Michael?
I mean, we've been talking about this topic for years, anyone that's watching our webinars. The key point is that, and I'll remind you something we've been talking about already for 2 years, the multinational companies, they see it as in their own interest to help develop the supply chains here. He's a busy guy, he's not coming here just because he likes egg coffee in Hanoi. They see it as in their own interest to build the capability of local suppliers. Guess what? The same thing happened in Singapore in the 1980s. The same thing happened in Thailand in the 1990s, Mexico in the 1990s. So we're going down the same road. And it means it's just another reinforcement that we have about another good 10 years of this whole FDI manufacturing story to go. Because right now we import a lot of the complicated parts and assemble them here. And you'll see, what this reinforces that we're going to make more and more of those key inputs here, basically.
And so I think, I'll add to that, because Michael, what you've said before is we basically import from China, we assemble, we export to the U.S. and Europe. And the reality is, you call it the eagle building the nest. They're going to not only take the factory that assembles, they're going to actually take 5 or 6,
Yeah.
all of a sudden, lift them up,
Right.
rebuild it, put it in
Right.
Vietnam an industrial park.
Right.
And what that does is it changes the overall complexity of the workforce. It increases the skills, it increases the compensation, and we talk about FDI as the key driver of the emerging middle class. And so, one of the things, and we talked about, a slide we used to show was, I think it was 2006, 2007, tech exports as a percentage of all exports was like 6-7%. Now it's 39%, then of a much greater number. And so what this does is it further increases the complexity and the skilled labor of the workforce, which is fantastic. All right, let me go back. A couple questions came in. All righty, so this one goes to you, Lynn. So we've talked about why we're optimistic. We talked about earnings growth. Looks very, very positive. We talked about our ability to generate alpha. What are the risks that you see? When you're talking to companies, when you're talking to portfolio managers, what are the risks that investors should think about?
One of the risks, probably mainly the macro risk, apart from the global risk, like from the political tensions in the Middle East, that could impact oil price. There are certain risks in Vietnam locally. The FX is something Michael has been mentioned a lot about. Also, right now for the stock markets is probably the interest rates probably increase right now a little bit, but will increase, so that could be. We have been in the low interest rate environment since a year, and right now as a record low level, even lower than pre-COVID level. And any small change, even small change in interest rate, that could affect sentiment of the stock market, I think. So it is something we could be cautious to look at.
Yeah, and I think it's, again, important. We've talked about this. We think of interest rates here as 12-month bank term deposit rates. We're now at, say, 4.5. Some of the smaller banks have higher. When we talk about low interest rates in the rest of the world, it was basically 0 or negative. And so we're talking about interest rates were at crisis lows. They're at 4.5. The U.S. is at where?
5, call it 5 for the short end. Yeah.
And it's like the highest it's ever been. Yeah, so it's our low is somebody else's high. So again, I just want to make sure we put things in perspective, because when people were investing at 9 or 10%, now they want to reinvest at 4.5. One of the reasons why we've seen, again, more people investing in the equity market. Okay.
And by the way, why we also think the real estate market will be picking up towards the end of the year.
Because mortgage rates have come down as well.
Yeah.
All right. So here's something people ask us about. Michael, I'll go to you because I understand the question. I certainly don't understand the answer. What is Vietnam's relationship with gold?
Right.
And I've read that Vietnam is now considering to be importing gold again. Vietnam meaning the government or the state bank importing gold again. Why?
Right.
And why is that relevant for people that are looking at Vietnam and trying to understand what's going on in the economy or in the market?
So the first thing let me say is that we often see in Vietnam policies that they do in China that work. They let them do some stuff first. They watch, see how it goes, and then they see when it works out, oh, maybe we should do a bit of that ourselves. There was a phenomenon in China that the gold price in China was trading at a premium to world prices for a while. And eventually what the Chinese did is they started to import a bit more gold to satisfy the desire. Because in Asia, gold is, Asians love to own gold. And the similar thing happened here in Vietnam, that the price of gold in Vietnam was actually above world prices, okay? So what the government is going to do, in our understanding, we just news announced like literally this week, is that they're going to first, they have some gold within their FX reserves. FX reserves almost $100 billion. Some portion of that is gold. And they're probably going to sell off a bit of that into the local market to help compress that spread between the price of gold here and world gold prices. But eventually they probably will go ahead and import gold because they've seen in China that it kind of worked out okay. So.
Sorry, I can add a little bit. For 11 years, the government has stopped import gold, and this week they want to auction, host the gold auction. In here, they will sell SGC gold bars to the market. There are about 15 participants, market participants that can join into the auctions. 11 years ago, there was some auctions before, and there was, I think, about 80 auctions has been held to help narrow the gap between the global and the domestic gold price. There was, I think, about 7 tons of gold was sold. But the thing is, after the auctions, the gap between the gold price, global and domestic, has not been narrow. So we don't know what is going to happen this time, but let's wait and see.
All right. A question just came in from Larry. So, Larry, I haven't seen you in a week. And so here's a question that I don't know if we know the answer to. So, forward PE past 10 years for Vietnam is hovering around 10 times. Seems low compared to that of China 10 to 15 years ago, or India today, which is like 22, I think.
Right.
Any good explanations?
Yeah, the explanation is you should buy Vietnam. It's easy.
That's a conclusion. That's not.
Yeah,
that's,
look,
and by the way, he's already bought Vietnam.
Okay, good.
Thank you, Larry.
It's not a complicated story. There was currently in India, there's a huge hype going on. People are, the proportion of Indians' own personal wealth that's invested in stocks has gone up over the last 5-10 years. But actually, if you look at the details, it hasn't really gone up that much. It's gone up by about 3-4 percentage points of their own personal wealth. So that's something. It's just foreign investors are just piling into, what we've seen is as people, we'll talk about India first and then we'll come back to China. What we've seen recently is money flowing out of China and into Japan and into India, India in particular, okay, the whole emerging middle class, blah, blah, blah. And then 10 years ago, there was something similar. People were piling into China. For whatever reason, in the whole 15 years that I've been here, it hasn't really happened. There haven't, I heard stories of like just before I came here in the 2008 type time when things were really crazy. And the whole time I've been here, including some experience working as a stockbroker, before here, before I was at this firm, we haven't had that kind of a foreign euphoria like we've had about China at that time and India now. And I think that's the simple explanation. There isn't anything more complicated.
So Larry, and to follow on that, there was a question that came in earlier about timeline for EM upgrade. And I think part of that is that the catalyst for, I don't want to call it hot money, but for people that have historically not invested in Vietnam or who haven't even been able to invest in Vietnam to actually be able to do so, we would say yeah. And so as we think about potential upgrade to FTSE, not MSCI, I want to be clear, we think we may get a FTSE upgrade. That may be the answer.
That would help.
Where people may come in.
It's also a liquidity issue. I mean,
Yeah.
when you want to dump tons of money in, yeah.
So would FOL be one of those things that's probably hampered?
Yeah, it would help.
That same, no, but the reason we haven't had the same issue?
Look at banks with the 30% limit. The valuation of banks would be much higher if they were full open to foreigners.
Yeah, and actually, the question came in about why are valuations so cheap. I think one of it is banks are roughly 40% of the market.
Yeah, trading around 1.4 versus high teens ROE is like incredible in the world. So.
All right, so we've got, I think we've technically gone over, but there were a couple of good questions coming in, so let me see if there's maybe one more. We talked, actually, I mentioned the upgrade question came in. We didn't really talk about a timeline. Is this something you're comfortable with? You've had conversations with FTSE?
Yeah, we recently talked to FTSEs. What we see this is that Vietnam has been included into the watch list of FTSEs since 2018, 6 years. We are not the country who stayed the longest in the watch list, but from last year, this has been including in the FTSE's market. It has been the KPI for the government. It's no longer a hope, no longer a wish like before, but it's a KPI for the government. So since then, we see the government has pushed a lot of pressure to talk to a lot of market participants, trying to find a solution to solve the hurdles for inclusion in FTSE emerging markets. Another way we like to look at it is that how much fund flows will come if we are included. Inactive flows could be about 500 million US dollar. Active could be around 5 times higher than that amount. The market cap of wholesale is around 200 billion US dollar as of now. It's not too small, but it's not too big. And follow that is MSCI. MSCI, usually if MSCI is, we consider as we are included in FTSE, MSCI will consider us to be included in the watch list as well, and the size going to MSCI could potentially be double compared to FTSE. Some of the stocks that could be included in the FTSE is probably the top names like Hòa Phát, the one we hold in our portfolio, and Vietcombank, we also have it. Vingroup, Vinhomes, those are the major names that should be included. In terms of the timeline, go back to the answer on the timeline. We talked to FTSEs, and last month the government released a draft. The draft that allowed the foreign investors to be able to trade without pre-funding requirements. It will take probably 2 months to 3 months for the regulator to seek public opinions before they approve for the regulations. After being approved, it will take probably about 3 to 6 months for FTSEs to talk to their committees, and the committees will talk to investors to seek opinions whether this would satisfy the requirements of FTSE. After that, the final decision there will be made. There are 2 times a year that the FTSE will look at the inclusion list, and that could be March and September. So if we can meet it, everything is come in line. If it happens, it will happen somewhere in September this year, next year.
Okay, terrific. Well, thank you very much, Lynn. Thank you very much, Michael. For those of you that are still with us, thank you. And if there is a question that we didn't get to, or if a question comes up that kind of you think about after the call, please send an email to me directly just to respond to the invitation. We will have the replay on our website, hopefully Monday afternoon or Tuesday morning. But thank you very, very much. We will see you beginning of July to review Q2 and give an outlook for Q3. So on behalf of Vina Capital, thank you so much for joining us.